Good morning, Paul Georgie from Allendale. It's July 26th, Tuesday morning. The USDA released their crop conditions report yesterday afternoon at 3 o'clock. That has provided some support for the grain markets here overnight, showing a decrease in the conditions in the good to excellent category for corn, 4%. Trade was looking for anywhere from 2 to 4%. They got the full 4% decline yesterday afternoon. Soybeans fell 2% in the good to excellent category. So maybe a little more than what trade was looking for. That helped supply the strength overnight and carried over here into the morning session. Some other factors that's controlling traders' mindset right now, and that is the weather continues to be extremely important. Portions of central, southern Illinois, Indiana have missed this rain here over the weekend, and that is a very critical situation for them. They need some moisture, and it looks like the GFS and the Euro models are suggesting that some heat's going to move back in here late in the week and through the weekend, putting more stress on these crops if they don't get any rain. And it doesn't look like the rain is going to be plentiful if the showers would develop. The thing that is most important from the weather maps, however, is the ridging that we were looking at last week, and the possibility of this extreme heat and dryness sticking around in the Corn Belt has flattened out to more of a zonal flow, and that is providing some hope, at least, that we can get some cooler temperatures and maybe some moisture in areas that need it. About 60 to 70% of the Corn Belt did get some moisture here last weekend, and that's certainly weighing on the market at this point in time. The other news is what's going on in Washington. The debt ceiling talks, negotiations, whatever you want to call it. It's a stalemate at this point in time. And with President Obama and the House Speaker Bonner yesterday evening taking primetime TV space to discuss their points of view, looks like we're in a stalemate here for a few more days. August 2nd is the deadline, and the American people plus other people around the world are getting plenty aggravated with the stalemate that's going on, because it could cause some pretty heavy consequences around the world as far as if the U.S. would default on their debt. So that's being monitored very closely. We're seeing the dollar under pressure again this morning. That could support U.S. grain prices. However, the big question is, what if they come to a conclusion, a solution, and does the dollar rebound sharply, and does that allow the grain markets to sell off here, especially with different moisture conditions and crop conditions? So we've got a lot of concern facing us. The market was relatively quiet overnight in a narrow range, staying a little higher on the day after yesterday's big sell-off. So we've got the first of the month coming up here, first notice day on Friday for the August contracts in the soybeans, meal, and oil. So those are things that are certainly important and are going to be monitored very closely this week. In the livestock trade, cutout values were slightly changed yesterday. Choice down 36, select up 11. Cash cattle are still at a standstill in the country. It's early in the week. Feedlots are asking $1 higher. The packers really haven't got any bids out yet here this morning, so we'll have to wait and see how that develops as the week goes along. Pork cutout values were up $1.35 yesterday. The futures market have been trading in relatively a narrow range here yesterday and today. We've seen that spike higher on Friday to take us to new levels of this move. So we are extremely overbought in the pork complex. However, still the concern over inflation and the growth of the pork industry in China is causing support and some buying enthusiasm in the pork complex. Cattle trade, however, is in a sideways pattern as well. We're getting near some possible seasonal lows. We're in that time period where we should be finding a seasonal low, and here we may have another week of weak prices to work through in the beef trade and the cash cattle trade as we clean up some of these inventories. So look for probably a more quiet day today, maybe some position adjusting ahead of some conclusion coming out of Washington, which seems to be pulling people away from the marketplace, and in end result does cause more volatility. So stay in touch with Allendale's research. We'll be happy to answer any questions you've got. I'm going to be out of town here for a few days, out to Audubon, Iowa tomorrow, Ankeny, Iowa on Thursday, and then Buffalo, North Dakota on Friday. So if you're in those areas, check out all the details on our website. Please stop in and see me. I'd be glad to say hi. And we wish you a very successful week, successful trading day, and I'll talk to you later on. Thank you.